Welcome to the latest Motley Fool scoreboard. I'm on Chocoballoon. We've got longtime fools Jason Hall and Rick Menares giving a 1 to 10 rating to a top 100 Moneyball database stock. It's Cadence Design Systems, ticker symbol CDNS. We'll rate the strength of Cadence's business first, including factors like industry and competition. 10's of invincible, 1 is hopeless. Both of you are, actually no, Rick, you're at a 7. Jason, you're at an 8. You're a little higher.
Yeah, this is one of 3 companies that really dominate electronic design automation software, EDA software. It has nearly 40% market share. There's growing demand, all of the tailwinds around AI, and just kind of the electrification of everything means more businesses need to figure out how to have the right optimized silicon for their devices. It recently acquired a company called Ancis, and I think that should accelerate growth and help it further consolidate market share.
Yeah, so companies, they turn to Cadence to improve their ability to design and verify chips and related hardware. It's obviously a growth business, and while it's not alone, competing with companies like Synopsys, this isn't a winner-takes-all market. You have to go all the way back to 2009 to find the last time that it failed to grow its year-over-year revenue. That's impressive.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Rick's at an 8. Jason, you're at a 7 plus.
Yeah, and the plus is because I think the trend is in the right direction, but management does have a little bit to prove here. So Lip Bhutan, that name might be familiar to investors. Lip Bhutan is the CEO of Intel now. He basically built the modern company that we're talking about here, but he's been gone since around 2021. So we have a new CEO and even newer executive chairperson, and their success, I think, when things are all done a decade from now, they're going to be graded on whether that Ancis deal created value or maybe kind of destroyed value around the margins.
Yeah, so a company that was started in the 1980s, it's not a surprise to see that the 3 UC Berkeley founders aren't in active leadership positions, even though one of them is still on the board of directors here, so that's nice. Its CEO has an 85% approval rating according to employees surveyed by Glassdoor, and that's pretty good. 86% of them would recommend working at Cadence to a friend. That's also pretty great. Revenue growth has been positive every year since his arrival at Cadence in 2012, and naturally since he was bumped up to CEO in 2021, so I went with an 8.
For financials, a 10 is a fortress, a 1 is yikes. Rick's at a 7 or a 6. Jason, you're at a 7.5.
Yeah, when you start pulling back the layers, the things that aren't super attractive is revenue growth is kind of slow and steady. Rick will talk a little bit about that, but you dig in and you look at things like the margins, profitability, the dominance of market share, the incredibly high returns. They're all super impressive. You haven't seen deterioration of those metrics, something that you see with a lot of companies as they get a little bit longer in the tooth. And then you look at the balance sheet and it's relatively neutral. You might think, hey, this is probably a big cash cow business. It does generate a pretty solid amount of cash flow, but it's returned a lot of that to shareholders over the long term. And the balance sheet's relatively cash debt neutral, plenty of resources as it needs them. But I wouldn't say it's a massive source of strength.
Yeah, so Jason went fractional, and I'm fractured here in my optimism. I mentioned that the revenue has increased every year for the last 13 years, but it's not exactly scintillating growth. Annual revenue has yet to top 20% in that run. It's like driving around in a school speed zone with your boyfriend or girlfriend, slow and steady. That isn't likely to change in the near term. Analysts see revenue rising 14% this year and 12% next year. The balance sheet is decent with a little more cash than long-term balance sheet, but 6.
All right, Rick, let's talk valuation. How well will Cadence's stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
Yeah, so I went 0% to 5% on the 5-year returns, a safety score of 6. Like someone going to the country's second largest home improvement store, I know I'm coming into a little lows here, but I'm just not comfortable with paying roughly 50 times forward earnings for a company growing its business in the teens. Yes, AI, but there are a big difference between an artificial intelligence stock and an artificial intelligence stock. Cadence is using AI to improve its business, but until it can use it to improve its growth, I think it's overvalued at this price point. I went with a rosier safety score of 6 because its consistent growth with a cash-rich balance sheet deserves that kind of comfort.
Yeah, Rick and I agreed on the 5% part, but whereas he thinks that's the ceiling, I think that's the floor. I think 5 to 10%, probably the higher end of that. Rick, I agree 100%. The valuation is very stretched. And one of the reasons the stock has been a big winner is because we have seen expansion of the multiple that investors have been willing to pay. It's well above its long-term averages. And I think that is concerning, again, considering this is a relatively mature company. And while there are tailwinds for growth, this is not really built to be an explosive growth business. I think the growth that it gets from that Ancis acquisition, how much of that growth is it able to turn into earnings that might make the stock look less expensive than it is over the long term? But if they don't execute the integration of those businesses well, then it's just going to be an expensive stock that investors paid too much for that does okay.
Thanks to both Jason and to Rick. They've given Cadence Design Systems an alright overall score of 6.4 out of 10, with Rick giving a top it to Synopsys. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Cintas. Till then, Fool on.